Hello, my name is Jorden Mumphrey, and the investment strategy that I've chosen to use today is stocks with a high yielding dividend and a low beta. How to choose the stocks is first you find as many stocks as you can with a beta of less than 1, preferably as close to 0 as possible, because beta represents market risk, and the lower the beta, the lower the average risk of the portfolio. And then you're going to look at the dividend payout. So you're going to look for stocks with a high dividend payout, and then also a low price per share to give you as many shares as possible for when the dividends do pay out. The stocks I've chosen to use is first Feral Gas Partners. I chose this stock because they have a cost per share of $24.50, which is the lowest of all 5 stocks I've chosen, and a beta of less than 0.5. So it's really not going to hurt the beta. But also the dividend is 8.25%, so it's really going to elevate the overall dividend payout of the 5 stocks. Next, I chose Cisco and Coca-Cola. I chose these even though the average beta is 0.62, so it's not as good as you want to have, but the prestige of the companies makes it worth the risk, with the cost being so low per share, with an average of around 38 per share, and the dividends being 30 cents per share. Next, I chose Verizon Wireless and Southern Company. I chose these two because they have the lowest beta of the 5, with an average beta of 0.23. Southern Company has a beta of 0.1, which is crazy, and the dividend payouts are around 0.53 and a half. So it's pretty good dividend payouts, and the price per share averages $47.50. So the low risk of these two is really going to help the average beta of the portfolio. The next thing is asset allocation, and this is how you distribute the funds of the portfolio to each stock. And how I've chosen to distribute this is based on the risk of each stock. So I didn't just give 20% to each stock. I did the lower the risks, the more percentage of the portfolio the stock's going to get. So I started off with Feral Gas that has less than a 0.5 beta, and I gave them 25% because of their dividend payment being 8.25. So it's really going to boost the average return of dividends. Next, I did Southern Company with the same 25%, because their beta is 0.1, which is the lowest of all 5 companies, and it's really going to lower the beta. So I got the highest dividend paying and the lowest beta of the 5 stocks with 25% apiece. Next, I chose Verizon, which had the next lowest beta. I gave them a 20% portion of the portfolio to help keep the beta down, with the cost of per share also being relatively cheap. And then Coca-Cola and Cisco, I gave them each 15% because their beta is not as low as I want, but the prestige of both companies together is worth the risk, and you get a pretty good dividend payout on both of them. Alright, the way I distributed the shares is you take the percentage of each stock you want to give to, and you give them the shares based on the percentage you want to give. So I gave Feral Gas 158 shares because that would be 25% of the overall portfolio. And then you go down the line like that. Next, to find the dividend profit, what you do is you take the dividend per share that the company pays out, and you multiply it by the number of shares that you purchased with each company to get the quarterly dividend payout. And once you have the quarterly payout, you multiply that by 4 to get the annual payout. And then once you have the annual payout, you're going to add up all the payouts of each company, and you're going to divide the payout of the company by the starting price of the portfolio to get a rate of return of 5%. So if you invest in these companies, you're going to automatically, off the top, have a gain of 5%. So you have a risk-free return of 5%. So To test this strategy, I simulated the fact that if I had purchased all 5 stocks exactly 1 year ago, today I would have a 1.8% rate of return, and which isn't that great, but it's also not a negative. So when you add the 5% dividend rate of return to the 1.8% stock market return, you get a 6.8% rate of return. And according to most investors, that's pretty acceptable. So I would have to say that my overall performance of my portfolio is a success.